everyone, and welcome to Time and Money Mastery. We are your co-hosts. I'm Indiana.
And I'm Sam. Before we dive in, make sure you hit that subscribe button so you never miss out on any of our episodes. Now, let's get started.
Hello, everyone, and welcome back to the Time and Money Mastery podcast. Today, we are joined by Jacob of advisory_corp_accountants. Hi, Jacob. Welcome to the podcast.
Thanks for having me, Indiana. Appreciate it.
Yeah, I'm really excited to get you on here. Tell me a little bit about what you do and your background.
Yeah, sure. So I'm an accountant by trade. Funny story, I knew I wanted to be an accountant since I was probably in about year 3. I did a maths test early on in year 3, got a HD, and figured I definitely want to be something numbers related. Then I fell in love with business, watched a lot of The Apprentice when I was in year 9 commerce class. My class was a bit rowdy, and so our teacher just used to play The Apprentice for us. So I watched a bit of that, figured out I want to be in business, I want to be in numbers. When I combine the two together, I've always said if you get numbers and business and they have a baby, an accountant is what would come out. So I decided to be an accountant, went through uni, did my CA, worked at a mid-tier firm for about 3.5-4 years, went to a smaller practice focused on smaller businesses, and which is currently what I do. Got about 2 to 3 years experience there, and then ventured out and started my own firm, Advisory Corp Accountants. Our role is to be the trusted advisor, hence the term advisory. Trusted advisor to our clients, where we help them save tax, and we help them grow their profits, capture more profits, and provide for their family, provide opportunities. That's what we see small businesses as doing, and that's what we aim to do.
Amazing. There's so much in there. That's awesome. I can't believe you knew what you wanted to do from such a young age. I'm actually so jealous. Like, I think I've had about 20 different career ideas in my life, and I'm only 25, but that's amazing that from such a young age, you just knew what you wanted to do. Did you know for sure it was accounting, or did you think like, oh, maybe I'll be a math teacher, or maybe like, were there a few options?
Definitely. I think up until year 3, I'm Egyptian by background. So it's always, medicine, doctor, engineer, there's all those sorts of things flying around. But yeah, when I did that maths test, I think definitely numbers. If I wasn't an accountant, and it potentially may be something I would explore in future, I would either be like a university lecturer in accounting or something numbers related, or a maths teacher. Maths was definitely my favorite subject. And I love teaching, I love educating, I love sharing my knowledge. So yeah, definitely lecturing, teaching would probably have been another option as well. Legal, my best subject was legal studies. I scored really well for that.
Me too.
So I could have been a lawyer. Yeah, could have been a lawyer in another life. But yeah, I don't know. I landed into business. It was my top priority. It was my top sort of preference, and then got in and haven't looked back, I guess. Yeah.
And whereabouts are you actually based?
Yeah, so in Rouse Hill, which is the northwest of Sydney, for anyone that doesn't know geographically where Rouse Hill is, yeah.
Awesome. Now, tell me a little bit why you care about money, why you love money.
Yeah, loving money is one thing. I care about money quite a bit, I'd say. And the reason I care about money, there's nothing vain to it. The pursuit of money is not something I would ever advise. And when I say that, I mean, I heard a quote that said, anyone who wants money is because they don't have much money. And the reason sometimes you get into the trap of wanting more money is out of desperation almost. In my opinion, doing what you are good at and what people are willing to pay for is what is going to make you a lot of money. So my objective would not be, I need money, I want money, I'm going to go hunt and get more money because I love money. The only guidance I would provide is, what are you good at? What are people willing to pay you for? Because a lot of people say, find your passion and follow your passions. But if no one's willing to pay for your passions, and you do value, providing opportunities for your family, providing futures for your family, etc., that's not, in my opinion, sometimes the best advice to give. I'm more of the opinion of find out what you are good at. If you are passionate about it, that's even better. But as long as you're valuable to the marketplace and you someone is willing to exchange that value for you, that's what's going to derive a lot of money. What would you do with that money? In my opinion, small businesses provide opportunity for families, for communities, and for the betterment of society. I'd say more capitalist in nature. So my view is the more value we can offer each other, the more money we can all make, and the more opportunities we can all provide. And that's my way of, growing a successful life from a monetary and value / opportunity perspective.
Absolutely. I think like too often like money gets, demonized, and it's not the case. Like the more money you have, the more you're able to give back to your community or help other people or put back into society. It's, money does help the world go round. It's as long as you kind of don't let it get too out of control, I would say. Now, I'm interested because my idea of an accountant is really painful. The person that you go to once a year right before tax time, and they're going to tell you how much money you owe and how much you may have to repay to the tax office. So tell me, I don't get that vibe from you when I look at your page and I see your reels. You're doing great, by the way. I feel like it's a lot more fun. So what would you say is like your mission or your perception of being an accountant?
Yeah, so definitely a part of the reason I started Advisory Corp was I saw a disconnect between the accounting profession was aging, I believe, just like the Australian population is aging. And there was a real disconnect between young entrepreneurs who are tech savvy, who were born in the world of instant, were born in the world of just rapid change. And really, I feel like there is a disconnect between those two generations. And there wasn't a lot of accountants who were out there who understood fully what the younger market was about, who empathized with the younger market. And I've always said that the millennial generation is the bridge between the tech savvy generation below us, even, who is just born with tech, and the generation before us who have seen tech come in at a later part in their life. We were, early teens when all that sort of stuff came around. So it really helps us bridge the gap between the two communities. So that's why I know that's a point of difference, and I really try to play on that younger, more in tune vibe, because I know that sometimes people like to deal with who they know, like, and trust, and that know, like, and trust factor is easily attainable when you're on the same page. They're on the same playing book as you. You both are aware of the issues you're dealing with, the way you're going through things, especially because I'm also a young business owner as well, right? So when young business owners deal with other young business owners, we get the struggle. I'm not an accountant who went up to partnership through the corporate world and has never run a business, before. I've actually gone to it. I've started my business from scratch. I've gotten it to where it is. So I feel like a lot of people appreciate that as well. And to be honest, a lot of it is just breaking that stigma of accountants have to be boring, dull, old, grey-haired, scary. It's about breaking those barriers. I've always been more of a empathetic people's person. I've always been an extrovert, and it's just naturally my personality has sort of brought that element to the business. So I hope that answers your question there.
I think that 100% is what makes you stand out, because like I have not had the best experience with accountants. It's usually quite, a tedious, painful process. As an accountant, would you advise people to actually come and see you more than once a year? Like other than tax time? Is that like, is it more of like a relationship throughout the year?
Yeah, 100%, to be honest, and 100% contingent on what you're doing and what your tax affairs are like. If you are a salary and wage person, and you only need a tax return once a year, or you only need an accountant once a year, then that relationship might look more like a once a year thing. However, even with that relationship, let's say you're an individual and you're thinking about buying an investment property, you're thinking about going heavy into shares, you're thinking about going heavy into cryptocurrency, something like that. It wouldn't hurt to get on the phone to an accountant, even if it's not that once a year conversation, and just say, look, heads up, I'm potentially thinking about doing X, Y, and Z. Have you got any quick tips to help me along my journey? That way, at the end of financial year, when you come to your accountant, you're both not pulling your hair out thinking, it could have been done differently. These are the documents you should have kept. This is how we should have structured it, and all that sort of thing. So for those people, definitely, at least before you make a big decision. For a business owner, it's pivotal, in my opinion, that you be in tune and on the same page as your accountant throughout the year. As a business owner, you're most likely registered for GST, so you're going to talk once every quarter when you transact with that BAS. You're also going to, I highly recommend everyone do tax planning, which is in the last quarter of the financial year. It's actually tax planning season sort of right now and pretty soon, where you are proactively looking at, how can I do things before the end of financial year to help my situation so that the year doesn't close and then I could have done X, Y, and Z, and I could have saved a bit on tax. I could have invested in my business. I could have taken advantage of some government incentives for me. That conversation is pivotal. So if you're a business owner, 100%, there is no reason why a business owner should not be in contact with their accountant at least 4 times a year to as many as required and as many as they can afford, and the accountant is on the same hymn sheet with that. And before you make any big decision, is my advice to everyone: get in touch with an accountant. Just pay if it's paid advice, that's okay. Just pay for that consultation or whatever. It will save you thousands potentially in taxes and complications later down the road. So yeah.
Amazing. While you were talking, I was like sparking all these ideas. I was like, oh, I have so many questions like to ask you.
Awesome.
Like first things first is like, what should somebody look for in an accountant? Because there's a ton of them out there. And am I right in saying that you specialize in different things, or are most accountants pretty similar?
Yeah, so there's two sorts of things. One, yes, most accountants specialize in well, I'd say most accountants are generic, to be honest, who are just, we deal with the SMEs. The problem when you say I deal with SMEs, small and medium entities, is that that's a range of turnover between $0 and $50 million. So in between that, there's a crap load of businesses that you may not know the right, like as an accountant, I may not know one industry as best as I know a different industry. And I think as you grow along your journey as an accountant, especially, you will niche down eventually, and you will have someone that you know their business, you know their way of doing things, and you just know the industry really, really well. That provides a lot of value for business owners. In terms of me and what my business does, we are purely for small businesses. So that I'm starting out, I'm trying to set up a business till about that $2 to $10 million mark of turnover. Anything beyond that, I will not touch, and I will always advise it to someone who is dealing in a more larger commercial space. In terms of what to look for in an accountant, I highly, and the thing I pride my firm on is the proactivity. So hopefully that's a word, proactivity, but it's essentially just someone who is proactive, someone who is willing to take a phone call from you and not disappear for months on end, someone who is willing to relate to the position you're in and not just treat you like a number in their client pool. So depending on who you are, each accountant, so for example, if you're just an individual selling wage person and you're dealing with an accountant who's got multi-million-dollar clients, you're probably not going to get the best service of them. And it's not a reflection of the accountant, it's just you're on different pages. So find an accountant and make sure when you do talk to that accountant, just say, look, this is my situation. Are you willing to give me the time of day? If not, that's fine. I can take my business elsewhere. And you're both on the same page on that. So proactivity, someone who's in tune with the tax laws as they're always changing, and someone who you like, know, and trust. I think is, you're going to see this person, you're going to deal with this person. It needs to be someone who you connect really well with, and that you feel comfortable with dealing with. Yeah.
Yeah, I think that's awesome because, until recently, I was just an individual salary wage earner. And yeah, it totally makes sense. Like if I was to go to, a big firm, like what interest are they going to have in me? And the fees are probably going to be a lot higher than what is necessary. Does your accountant need to be local to you, or can you have like a location independent accountant?
Had you asked me this question a year and a half ago, 2 years ago, I probably would have said, look, it's probably best to go to a local. But the honest truth is, during COVID, I think I picked up more clients in Queensland and Adelaide than I did in New South Wales, which is a testament to the way business is working right now, and that we can do a lot of this via Zoom. We can communicate. Our softwares are online, so if you have an online accounting software, you don't necessarily have to be at the same location. It really has opened up a world of your accountant could be, I could be sitting on a beach in Hawaii and you would have no idea, and we would Zoom as normal and our relationship would be completely normal. Some people do like the face-to-face contact. I also like the face-to-face contact. I would prefer having the ability to shake hands with my clients, to have that body language and to really develop a relationship. But in Australia, what's a flight cost me to Queensland? $50. Like, I mean, it's the barriers are so low right now to dealing with someone outside of your locality. So I would honestly say it doesn't matter at all anymore.
It's funny how COVID has changed our perception of things massively. Like,
For sure, absolutely.
everything can be done on Zoom now, which is awesome because like my financial advisor is in Perth, and there would be no realistic way for me to go and, have 3-4 meetings with him in Perth. That would just be unrealistic. So I can do it all via Zoom, and it's great and it's amazing. And I really, really trust him, and I wouldn't want to go to someone that's local that I don't know. So I think that's really, really cool. Now,
100%.
At what point, I think you sort of covered it, but at what point would an individual, just wage earner, go to an accountant? Would you just recommend that once a year right before tax time? Or would you say like they don't even need an accountant, they can pretty much just do it themselves? I know that kind of goes against your whole business, but just for the standard salary wage earner.
Yeah, just to preface that, look, my goal as a business owner is to help my clients. So if I had an individual come to me and they had the ability to do it themselves and it saved them $150, I'm not going to take the fee just for the sake of taking the fee. I think to act ethically would be to act in the best interest of the client, and I'm happy to just do it on my gov. You might save yourself some time and money, or some money, probably not some time. So in regards to the individual, if you are an individual who very, very basic, year on year, it's the exact same thing, and your deductions are very limited, and you have a strong knowledge of what you can and can't claim, you have a strong substantiation base where you have your receipts, you're very organized, you're meticulous in what you do, you could literally go onto MyGov, it will pre-fill your data, and you can put through your deductions. If it's under $300, you may not even need substantiation. So for someone like that, you can do it yourself. For someone who's not comfortable just lodging it themselves and just needs a holding hand sort of thing, and for a selling wage, it'll be about $150 to do a tax return. So it's not a substantial amount to save you the headache. I would recommend going to an accountant. It's a very quick process nowadays. We turn tax returns, individuals out very, very quickly. So there's that. Once you start buying a property, having some shares, selling those shares, so making capital gains, and doing things like that outside of just your regular wage, I would recommend getting in touch with an accountant, and really just getting some tips along the way. And there's probably, like, if you're buying an investment property, for example, you may not know to get a depreciation report when that property is built or at any given point. An accountant will have that inside knowledge that will be able to share that with you. So at that point, anything beyond a salary and wage earner looking to do things, definitely. Business, 100% always advise going to an accountant. And yeah, I think
Awesome.
That hopefully answers your question.
So a lot of my followers and listeners do fall into that bracket of either standard salary earner or sort of like me, which is like content creator, sort of online digital world. Now, I have two questions for you.
Sure.
A, what can I claim as a content creator? And how much can I earn as a hobby before I need to claim it on tax?
Sure. So I'll address the hobby question first. So in regards to whether you have a business or whether you have a hobby, there's actually no amount. It's a common myth that I hear about, but there's no set amount. So what the ATO is looking for is the commerciality of your operations and whether you intend to make a profit through your operations, as opposed to it's just a hobby. It's I cover my costs and I think the story I always tell is as follows. If you go to a party, you make a cake for someone as a gift, that's obviously a hobby. If someone at the party says, that's a great cake, I'd like to make one sort of similar to that, could you provide that to me? So now you've got a few more people that wanting cakes. You might cover your costs and provide that cake, and that's still a hobby at that point. Once you start thinking, okay, there's a lot of people that are asking me for these cakes, I can probably start charging more money than I expend on that. I've taken steps, like I've bought a new cake machine or whatever, you like I don't know, commercial sort of kitchen or something like that, and you're intending to make a profit, not just cover your costs, that is now a business. And there's some guidance that the ATO has on their website with the different factors. I think there's 5 to 7 factors that you can look through to help you make a decision. And even when you go to register an ABN, it asks you, are you operating a business? And that to answer that question would be to have used that ATO guidance and then to have satisfied the criteria, because you can't get an ABN if it's just a hobby. So that's the first part of your question, business versus hobby. The second part of your question goes to what can I claim and sort of what are the general rules around that. So there's 3 main rules with what you can claim and what you need to keep. So the nexus between, and nexus is a fancy word for connection. So the connection between your income and your expenses must be easily explained. So let's say I'm an accountant. I am an accountant, but I'm an accountant. I buy a calculator. Okay, there's a direct connection between my earnings and my calculator that I just purchased, in that I use my calculator for my job. It's what I do. It's sort of the bread and butter of my activities. So because I have income and because I have an expense relating to that income, I can claim that. That's so 1, you need to have a nexus. 2, you need to keep good records and receipts. And the third has escaped me. But those general 2,
right.
those I think I've encapsulated 3 of them into 2. Sufficient nexus or connection, must have written documents, must be related to the income that you're earning. So for an example, if you're a creative, and you produce content and get paid to produce that content, perhaps the camera that you use to create that content, the paid ads, if you were distributing your content out, your paid ads potentially would go against that income. Your subscriptions to Canva, for example, if you're using graphics and all that sort of thing. So anything that you can substantiate that has a direct connection to your earnings as part of that business.
So what if you're not earning enough to make a profit and it's still considered a hobby in the ATO's eyes? Can you still claim that as a business expense if it's technically a hobby? Okay,
so if it's a hobby, no. If it's a hobby, you cannot claim these expenses, but at the same time, you don't declare any, there would in theory be no income. So you won't be in a profit position, so you won't need to declare those expenses and income. If it's a business, then obviously you can claim those expenses. It doesn't matter so much as to whether that puts you in a loss position or a profit position. That's just a part of business. Sometimes you trade to make a profit, sometimes you trade to make a loss. But it doesn't that doesn't reflect your ability to make a claim of an expense against the income. As long as you're making the income and you can attribute the expenses to that income, then that's acceptable.
Okay, and I have another question. So say I'm not, but say I'm a YouTuber and, my job is to, I don't know, I make fashion videos and I do clothing hauls. Is that an expense I can claim?
Okay, so this is a grey area, is the truth, and I haven't seen a lot of test cases, but as general guidance, the ATO is very clear in saying that if you are trying to claim clothes, that those pieces of clothing must have a logo on it, must be specific to your role. So if you're a chef and you have a chef's hat, that's okay. If you, the key example is, like, for example, if you're a hairdresser, a lot of hairdressers just wear all black, right? Where if I'm an accountant and I wear a suit, that is not deductible. The reason it's not deductible is because these pieces of clothes, I could wear this suit to a meeting like this. I could also wear this suit to a wedding the next week. Because there's a private nature of the clothing you're wearing, it is non-deductible. I would steer clear of claiming any of those expenses. However, I've not seen a case where there's like a content creator or something like that being tested. But the general guidance seems to go against claiming any part of your personal, private in nature clothing and things like that. If you can wear it out to the city, then it's probably not deductible, regardless of what income you derive.
Interesting. So I wonder how they get around that. And anyway, not my problem. So I have actually put out a little bit of a question to our listeners and some of their own questions. So I'm going to ask you a couple of those. So one that I got was, how do I rent an apartment when I work for myself and I don't have like an official payslip from an employer?
That question would probably best suited to a real estate agent or someone along those lines. As an accountant, I've been asked to confirm someone's income, which I've done. But in terms of how you would go about doing that, it depends on what the landlord's requirements are. That's more a question towards a real estate agent than it is towards an accountant, I think. So okay. I'll probably refrain from answering too much of that. Yeah.
Okay, so you can't sort of make your own pay slip or anything like that?
No, definitely not. When you work for yourself and have no official pay slip. So working for yourself, if you're a sole trader, you will not have a pay slip. You will have a tax return though. So for example, I have been asked, can you confirm their income on their tax return? And I have confirmed on the lodged tax return, this was their income. That's potentially a way of providing substantiation to your income. If you're a company or a trust, you will have, especially if you're a company, you will be paying yourself a wage. So you should have a pay slip in that regard, because the business is separate to you, and it's just you're an employee of that business. Where it's a trust, there's two ways of paying yourself. You can take a profit distribution. You could also take a salary and wage. So depending on what the real estate or landlord would need, your accountant might be able to give you your profit distribution, and that might help. Or your salary and wages from your company, you will have pay slips for that anyway. So I hope that sort of roughly answers your questions, at least from an accounting perspective, of what you may be able to provide. But it depends on what the agent would really need.
Yeah, awesome. Okay, so another one that we got was, what happens if I registered for an ABN but I never made any money through it? Will something be flagged with the ATO? Should I cancel it if I no longer use it?
So a couple of options. When you say flagged with the ATO, look, as long as you've done everything correctly, you've opened an ABN because you were in business at the time. If you didn't make any income, it is what it is. Sometimes it happens. I would, either if you are going to continue to pursue the business, maybe leave it open. If you definitely have ceased that business, I would potentially cease the ABN. However, an individual has one ABN, and you can change the activity of what that ABN does. But if you were to start a business in future, you would either need to reactivate that ABN or apply for another ABN. So it just really depends on, if you know in future you're going to start a business, there's no cost to maintaining that ABN. There's no cost to it's not like where if you set up a company, there's an ASIC fee. So that's sometimes where people shut the company down. But if you have an ABN, there's no cost to having it. So it may be something you may not worry about. If you are concerned about, I just want to close it and forget about it, you can also cancel your ABN registration as well. Yeah.
Okay, so it sounds like there's kind of no harm in just keeping it around. You never know what you might do down the road anyway. Amazing.
That's
So
right.
another question we got was, can you live overseas and still own an Australian business? What are the tax implications?
Yes, you can still live overseas and own an Australian business, to the best of my knowledge. However, your tax residency would be probably the most contingent topic in that regard. Now, there's a few different criteria for becoming an Australian resident for tax purposes versus your tax residence being overseas. And there is some tax agreements between certain countries which may have some bearing onto, it's quite a complex sort of issue. But the general guidance is it's hard to tell because there's not enough information in that scenario, but if you were born in Australia, meaning you domicile in Australia, if you have lived in Australia for at least 183 days, I think it is, in the 183, 186, essentially, if you've lived in Australia for longer than half the year and then you went overseas, if you have, your main connections with Australia, so if you still have your family home in Australia and things like that, you will be considered an Australian resident for tax purposes, and you will be liable as an Australian resident to pay income tax on worldwide income. So, that might include if you're overseas and you're supporting yourself through working in that country, you will also be required to pay tax on that income. However, you will get a tax credit depending on which country it is for the taxes you've paid overseas. So it's a complex issue. I would definitely advise getting in touch with an accountant, and potentially even an accountant who has regular dealings with foreign tax implications as well.
Yeah, it does sound tricky. So to speak, if you were not living in Australia for that half a year, you would not need to pay tax in Australia. You would need to pay it in the country you're living in.
Potentially, because there are two other rules. I think there's three. I have to look into it in detail, but there's also other rules. So if you have, if your permanent abode is in Australia, so if you have a connection with Australia, your family home is still in Australia, you haven't cut ties with Australia entirely, you would still potentially be liable to pay tax in Australia as well. If you domicile, so if you were born here as well, you would still potentially, it's a waiting. It's not just I haven't lived here for 180 something days and I'm good to go. So it's really unique to each scenario.
Okay, awesome. Now, another common one, and I have this one even myself, is how do we claim car expenses? How many kilometers, petrol, etc.? What proof do I need to keep? And is there like a best system or platform that you would track all of that in?
For sure. So funny you mentioned this. I made a reel about this literally a day ago. That if you've seen any of my reels, this is the one to see, believe me. So there's two ways of claiming your car expenses. One is called the cents per kilometer method, and the other is called the logbook method. So the cents per kilometer method is a set rate for every kilometer of travel you do. That is a business-related trip. The logbook method is a percentage of business use based on a 12-week logbook that you would apply to all your expenses in regards to your car. So I'll sort of touch on each method. The cents per kilometer, well, first let me preface by saying what is a business-related trip. From home to work and work back to home, if you have a set location for work, so let's say you're a city worker and you travel from home to work and work back to home. Those two trips are not deductible. They are private in nature. Everyone has to do that. If you are traveling from home to work, that's not deductible. You're at work and then you have to see a client, or you're at work and then you have to go to a different place of work. That trip, the second trip, is tax deductible. So you have to be careful as to what trips you're actually calculating your kilometers on. And this applies to both methods. Now, If you don't have a set location and you're always driving to a different location, that is tax deductible because there's no place of work. You have, if you're a salesperson on the road constantly, all those trips are tax deductible. The private ones are home to private locations on the weekend, taking your family out, all that sort of jazz, just a normal sort of private stuff. In the first method, you would simply say, okay, I traveled every year. It's estimated that I traveled 20 kilometers per week from work to a client and client back to work. I did 20 kilometers a week. I times that by 52 weeks. So I get about 1,000 Ks. And then I claim, I think it's 66 cents at the moment. It changes sort of every year. I claim 66 cents of that. And then that's your deduction. It'd be $660 thereabouts as a tax deduction. That's option number one.
66 cents per kilometer on business trips.
Yes, the rate has probably changed. From memory, roughly it changes sort of every year depending on what the budget decides. Now, with that, there is a limit of 5,000 business kilometers. So you cannot exceed the 5,000 kilometers. That's the most of it. What you need to keep to claim that is you don't actually need to provide each single receipt. However, you will need to be able to provide a reasonable estimate and a substantiation for that estimate. So it might be, I travel 20 kilometers a week to see clients and I times that by 52 weeks, whatever. And the substantiation may be, yes, my employer is able to sign off that that's legitimately what I do. So that's the cents per kilometer. Now let's move over to the logbook method. The logbook method goes along the lines of you keep, for a 12-week continuous period, you keep a record of how many of those trips were business and how many of those trips were personal. To grab a logbook, go to your local post office or news agency, and they should have a motor vehicle logbook in there. Alternatively, you can keep an Excel spreadsheet. You can keep it. There's probably a few digital apps. I know the ATO has a deductions app. They probably have one in there as well. All you need to do is every time you get in your car, starting odometer, and then you go to the trip, closing odometer, work out the total Ks. Do that for every single trip for a 12-week period. Decide which trips were business, which trips were personal. Get all the business trips, divide it by the total Ks you did. That's now your business use percentage. It might come out as 50%, let's call it. Now, with all your expenses that you claim, that you use for your car, how much it costs to buy you and the depreciation, the fuel, the maintenance and rego, insurance, oil, everything like that, you claim 50% of that total amount as a tax deduction. You have the option between both methods. Ideally, you do whatever gets you the best result, essentially. So but in the second method, it's not just a logbook you need to provide. You need to provide a logbook. You would also need to provide every single receipt that you've spent that you might capture. So the easiest way to keep receipts is get a Dropbox, take photos of your receipts, upload them to your Dropbox. If you have a bookkeeping software, you can also use that to help you keep receipts and records and things like that as well. So I hope that it's a bit of an answer, but I hope that helps.
Yeah, no, that's good. It's just, wow, there's a lot, isn't it? They don't want to make it too easy for us.
That's it. The government want their money, let me tell you.
Absolutely.
But it's also like, there's the tax law, the words, they estimated the US tax code is about 1 million words. About 6 million words. To put that into perspective, the whole Harry Potter series is about 1 million words. So it's the reason that it keeps me in a job.
Yeah, absolutely. So I know you said it's kind of whatever suits you best. Do you find one is easier or better than the other?
Yeah, the cents per kilometer is definitely the easier method. It's easy because you don't need to keep substantiation besides an estimate and things like that. So most people, especially saying wages, most people use the cents per case. We're a business owner where you have, you're a salesperson, you're on the road a lot, you're receiving a motor vehicle allowance potentially. In that scenario, you would definitely use a logbook and probably get a better option. So the more you use your vehicle for business, the more you should think about keeping a logbook. Yeah.
So as a personal example, when I do my disability support work and I may have 3 to 5 different clients, so is that considered a set work location if there's multiple, or is it like you just have to have one?
So a set location would be like a head office or a single location, and your clients came to that. But if you have, multiple different patients and you're on the road and you're between patients and you're sort of going out to between patients, those trips would be deductible. So for you, I'd probably be keeping a logbook, by the way.
Okay.
There's enough there to say that, you're probably driving quite a bit for that. And your car's depreciating and you're spending money on it. So I would be keeping a logbook in terms of that. Yeah.
Okay, so I got to keep a record of, so I get in the car, the starting kilometers, and then when I get out, the end kilometers. Do I need to keep like time frames, dates, things like that?
Dates, yes. Time frames, I'm not 100% sure about. I think it's I would believe it probably be tedious, but that's very tedious. The more the better. But I would follow whatever the standard sort of logbook you buy is the one I'd give to my clients. That's usually, I know that's accepted by the ATO. And then you could use the ATO app and whatever information they ask you for there, it would be prudent to more is better.
And then I can keep 12 weeks and that's enough for the year.
12 weeks is enough for 5 years. So once you get your 12-week logbook, that's it. Once you get your 12-week logbook, you're good to go for 5 years, unless your situation changes, unless COVID happens and you don't use your car again. That would be a substantial change and you probably need to keep a new logbook. But just as a general guide, 12 weeks should be good for 5 years. Claim X% of all your business, all your car expenses, and you're good to go.
That's awesome. That's such a huge help for me already. Thank you. And I'm sure some of our listeners are in similar situations. So I had one last question for you because I don't want to take up your whole day. And that was, I always hear this thing about like, if you're going to make any sort of big purchases, to wait till like right before tax time. Is that something you advise, or it doesn't really matter what time of the year you do it?
There's two answers to this. Number one is you always have to think about the commercial decision. So what is commercially viable and what does my business need from me as a business owner in the immediate? So let's say you need a piece of machinery. I don't care what the tax implications are. If you need that piece of machinery, it's probably best to buy that piece of machinery when you need it. However, it is prudent to look at the tax differences on, whether you time that differently or some potential tax advantages. And I'll give you an example. At the moment, there is an instant expensing rule where any of your capital assets that you purchase for your business are immediately deductible in the income year. And I think that goes up until 2022, so the end of 2022. However, we didn't know about that. So that's good. And that came in 6 October, I think last year. So knowing this, I would say, look, anytime you want to buy an equipment is a good time. Ideally before end of financial year. So we bring forward the deduction 12 months. So let's say we waited till we're close to June now, right? Let's say we bought that piece of equipment now, we would reduce our tax bill right now. If we bought it after July, we would have to wait another 12 months and pay tax this year. We could have had that money that we have given to the ATO now. We could have had that money and use that money for whatever we needed, instead of doing a purchase in 2 months from now, where 1 July, I've missed that deduction for another 1 year's time and I'm paying tax on my profits this year. So there is a timing benefit pre-30 June, especially if you're close to 30 June and it can wait a couple of weeks, right? Let's say also the depreciation caps change, because the depreciation caps do change year on year. Obviously, we have the instant expensing now, but before we had a $150,000 limit. That $150,000 limit was due to expire 31 December. Had you bought a piece of equipment pre-31 December, you would have had $150,000 cap. After 1 January, the cap went down to $1,000. So massive difference, right? And you would depreciate that over X amount of years. So there are massive, I think as well, the key to tax planning is really timing. So hopefully that explains the example for a purchasing equipment point of view, but let's look at it from a capital gains perspective, right? Let's say you had some shares and you held those shares for 6 months and then you sold it, versus you had those shares and you waited 12 months and you sold it. Obviously, if you've held it for 12 months, you get a CGT discount. If you hold it for a shorter period, you would not get the CGT discount. So let's say you're at month 11 and you could have waited another month. Well, maybe let's wait another month and get a CGT discount and cut some taxes that way. However, you need to think commercially, like, is this share going to go down in a month's time from now? Do I think this is the right time to sell? That may guide your decision. But it is also, I think, smart to consider the tax effect, but make the most commercial decision for you and your business. Don't just spend money and don't just do things for the sake of saving tax. Do things for the benefit of your business, with a tax benefit being secondary, but a great cream on the crop, I think, of that as well.
Yeah. And for those listening, CGT is capital gains tax. I think that's going to be like a whole other episode that we're going to have to talk about, because I know me and my listeners are super into shares and investing, and the whole like tax implications around that is so confusing. But that's like a whole other session. And I think you've successfully proved exactly why you need an accountant, because there are so many things that the general public doesn't know, and like so many things that we could be missing out on, and like little like discounts and special considerations. So definitely worthwhile investing in an accountant. You've sold me. I already had one last year, but didn't really float my boat. So I definitely need to reconsider who I'm using. That's for sure. My final question that just cropped up in my mind was around education, because I know me and my community, we're really big on self-education and constantly pushing our knowledge further. So is there any sort of limitation or parameters around how much we can claim? So not like uni expenses, but more like, if I do a short course, or if something like that, can I claim 100%? Like, what can I claim around that?
Yeah. So again, the tax law is pretty specific when it comes down to this one. But I have seen there are a lot of now, like 5 years ago, an online short course in any topic would not have been available as much as it is in this day and age, where people are getting out of uni and doing so many more educational pieces that I don't think the ATO has kept up with reality of what's happening. But in summary, where your education or where your course is directly related and has a nexus to your current role and leads to you earning more money in that role, it is deductible. Okay. However, let's say you are studying to change career paths, or to do something slightly different to what you're doing. That there is not deductible, because your current earning activities don't reflect what you're studying, right? And what I will add is the ATO sometimes are super specific on exactly how that relates to your income. So I'll give you an example. I'm an accountant and I have a uni course in accounting, right? I did a business accounting subject. Deductible because I'm an accountant. I've studied that. That could lead to me getting pay rise, or could lead to my progression as well. So deductible. Where it is vague, where it's like, let's say my role as an accountant, I was working for someone and my role was strictly process tax returns and financial statements, right? And I did a marketing subject, right? Or I did something in marketing. That marketing subject, I don't think would meet the ATO's criteria, because as an accountant in that role, would I be doing marketing activities? Probably not. Is that in my job description? Probably not. So again, same sort of, let's say it's same degree, business degree, whatever, that subject I don't think would be deductible, because it's not specifically related to your role. So you have to be careful, but it's all on the ATO website. I think if you go down their self-education, it's called self-education, and you go down their website, there are criteria for you to meet, but they are quite stringent as well.
Okay. So what about if you have like two roles? So say for me, I'm disability support worker and then I'm a money coach. So what if I want to, for example, go and do a Cert 3 in disability? Would that be something I could deduct? Yes.
Yeah, absolutely. And as long as, so yes, because you have two sources of income, right? So remember, the first golden rule was, does it have a nexus to your earnings? Yes, in that regard, it will. So you have the ability to say, I earn disability income, I'm doing a disability course, therefore it is related and I will claim that. If you had quit that job and then later on decided, I wanted to do disability course, it would not be deductible because there would be no income against it. So where you have income, you're putting some expenses against, yeah.
And then if I at the same time wanted to do something around my coaching, I could
Correct.
still claim that as well because I have two incomes.
Exactly.
Amazing. Oh my gosh.
Yeah.
I feel like I have learned so much. Thank you so much. Like, I honestly really appreciate it. Is there anything like that you want to add, like shout out, like where can people find you?
For sure. So two main places nowadays where you can find me. Number one's on LinkedIn. So it's Jacob Farmy on LinkedIn. I put out some content there around different topics, and advisory_corp_accountants would be our Instagram handle. Regularly really put out a lot of high value content on there. And then I'm currently rebuilding the website as well. Once that's done, hopefully by end of financial year, that's going to be an amazing source of information as well for you. If you want to contact me directly, there's links in my bio, there's email addresses floating around everywhere. And you can book a time in my Calendly link. First consult, initial first 15 minutes is free. And then after that, time rates or whatever our solution we tailor for you would apply. But yeah, I'm always more than open to have these conversations and educate more people. I think the biggest problem with tax is that we just don't know enough as coming out of uni, coming out of school, and it's such a fundamental part of life that I think there's not a good amount of young, relatable people educating us on this. So in future, I think I'd love to also do more in the educational space as well. But as the focus is, difficult trying to find time to do all that. But yeah.
Absolutely. Thank you so much for joining us today. And I will link all of your links in the show notes, and hopefully some people will reach out to you. I'm sure people have gotten lots of values from this chat. Definitely go and check out Jacob's Instagram. He has some really fun reels and things like that. He's not the way I was thinking about it was like from Mean Girls. It was like, I'm not your regular accountant. I'm a cool accountant. Like that's how I see you. So thank you so much for joining us today.
That's right. Thank you so much for your time, Indiana. I appreciate it. And I appreciate what you're doing in educating and providing as much value to like-minded people as possible. So I thank you for that as well.
So that's a wrap. If you loved today's episode, leave us a 5-star review on Apple Podcasts and let us know why you loved it.
And if you know someone who needs to hear this, then send it their way and share it to your stories, tagging us at Time Money Mastery.
Feel like you're wanting just a little more? Jump on over to our Facebook community. You can find the link in the show notes.
That's all from us today, fam. We'll see you soon.